You say all the right things when I'm hurting. You always pick me up when I am down.
What's up, everybody? Welcome back to Money Mondays. And specifically, we are in the option series. So we're in day 2, or should I say week 2 of a 5-week option series. So we got a lot of cool stuff to talk about today. Specifically, we're going to be breaking down call options. So that's what we're going to be diving into today. If you're watching live, leave a comment below. Love to know which platform you're watching. Are you watching on Facebook? Are you watching us live stream on YouTube? And then also let us know where you're from. I'd love to know where you're watching from. And if you haven't already, hit the subscribe button and that bell notification. I think last time we counted, we were at 60,885 subscribers. I think we jumped over 61,000. So if you love the free content that we're putting out, hit the subscribe button, hit the bell notification so you can get notified and help us march, be a part of the community as we march towards 100,000 subscribers. All right. So I'm going to switch screens and I'm going to pull up the slides and walk through what we're talking about today. And then we're going to get into it. So let's go. So this was last week's content. So let's bring up this week's information here. So give me 1 second to get that loaded. And we will have the new option kit that we're walking through. And you know how you like, I should have did this before we got started. But that's all right. I'm going to make sure it's up and loaded for you. You should be able to see it. And let me bring this back here. All right. You should be able to see the new 5-part option series. So let me just triple check something here before we open it up. And all right, there it is, ladies and gentlemen. So give me one moment here. I'm going to go back full screen, or I'm going to go back full camera here. These slides didn't load the proper information. So while we're doing that, this is probably a great time for you to hit the subscribe button and hit the notification button. Or if you got some friends, right, who you think should be knowing about this information, this is a great time for you to share with them, you know, by sharing on your profile or tagging a friend below. So I apologize. Rock with me. I'm going to give you some music while I'm fixing this, and then we'll be right back here. Let me see what we want to hear. Faster car? Let's go.
I've been feeling so small. Watch the clock ticking off the wall. But tonight I'm letting it go. Spend my coin for sure. I'm gonna be myself, or I could be someone else. No one's stopping me now. I'm gonna skip my breaks. I'm gonna make mistakes. I just wanna feel alive.
That's what I'm talking about. I'm gonna make mistakes. I made a mistake, but I'm fixing it. That's right, but it's not gonna hold me down. We're gonna get through this information. It's like my mama used to say, how they be like, you know it's good information when the devil or something try to stop you from sharing it with people. So we gonna get through this. Boom. All right, I just fixed it. The new presentation is ready. Just give me 1 second. Lavo, it's all part of the software, part of the production.
faster car. Lay my troubles to rest. Blow the smoke through my cigarette.
All right, I think we ready.
City lights looking fine.
I think we ready, but I'm gonna let the music ride out until I get it loaded. So bear with me.
I'm gonna be myself, or I could be someone else. No one's stopping me now. I'm gonna skip my breaks. I'm gonna make mistakes. I just wanna feel alive. It's just what I do when I'm out, so try not to hold me down. Feel alive when I'm in this town. Look at those beautiful stars. I wanna drive a faster car. Nothing can break me. No, no, nothing can break me. Try not to hold
Boom.
me
We're almost there. We're almost there, ladies and gentlemen.
when I'm in this town. Look at those
Okay, it's
beautiful
looking good.
stars. I
It's
wanna
looking
take a
good.
trip to Mars. Nothing
Boom,
can
boom.
break me. No, no, nothing can break
Ah,
me.
let's go. All right, all right, all right, all right. Ron Kohler watching from Detroit. That's what's up. So we just had a little technical difficulty. So thank you for sticking with me. If you're watching the replay, again, thanks for sticking with me. That's how I know that this is going to be powerful information, because anytime that there's glitches or hiccups that try to stop you from sharing this with people, instead of me complaining or getting nervous, I always say that's how I know this information is going to be fire and change some people's lives, because there's bumps and hurdles that want you to shut it down, reschedule it, redo it another time. But that's not happening today. So let's go. Let's get into it with no further ado, my friends. We are in part 2 of a 5-part option series. So let's walk through just a big picture recap. If you didn't catch last week, we talked about options as a big picture. So we walked you through, what are options, big picture, how they work, how they're used. This week, we're going to be talking about call options explained. So if you're watching live, that's what we're diving into today. Again, be sure to subscribe, hit the bell notification, because next week we're going to be diving into put options, right? So how to use protection, how to make money from stocks falling. Then the week after that, we're going to be talking about spreads, putting options together as combinations. And then we're going to end this thing out on part 5 with the top 10 option questions answered. And we'll probably do live Q&A so you can bring any option questions that you have to the session as well. So if you are ready to go, send me some emojis, send me some love, and let's dive into the information. All right. So let's go, let's go, let's go. All right. So this is what we're going to talk about today specifically. We're going to break down what is a call option. So if you're not familiar with an actual call options, there's only 2 types of options, calls and puts. We're going to break down what a call option is, when to use the call option, right? Because it's not just good to know what it is and what it does, but when are you supposed to use it? There's 3 different types of call options, which I think confuse most people. We're only going to be talking about one of the types, right? Because time's sake, but there's 3 types of call options. We'll break down each 3, but we're only going to use one as an example. Then we're going to show you the difference between buying a stock and buying a call option. We're going to do a side-by-side comparison. Then I actually pulled a real trade from my real account just, I think, last week. I'm going to show you a real trade from my real account with call options that I use. And then we're going to end it with the pros and cons of using options, because it's not all just, what they say, sunshine and roses. There are some cons to it, but there are also some pros. And it's about just knowing when to use options. All right. Here's what will not be covered. All right. So there's 9 different strategies that I explain inside of my course called Options Explained. So we will not be going through all 9 of those strategies. It's just there's way more that goes into this, but we are going to walk you through at least one strategy today. We're not going to be talking about selling options. So everything that we're going to talk about is going to be from a buying perspective. All right. So don't need anyone commenting, but you didn't talk about selling. There's so much to cover with options. We're going to stick to buying an option, but we're going to touch on being a seller, but we're not going to go that deep into it. There's also the Greeks, volatility, theoretical models. All of that is stuff that we cover in our Options Explained course. Not enough time to get into it here. And then we're also going to not get into how to repair an option. So there are things you can do if the option moves against you. You can get out the trade early. There's things you can do like spreads, sell it, buy it back, all kind of stuff. Roll it out, extend your time. Those are all things that, again, we're not going to get into in here. This is going to be in depth on how to use call options, but we're not going 30 module course in depth. All right. So just wanted to be clear and upfront for those of you who are watching. So let's go. All right. So just let's review for a second. The market moves in three different ways. So the market moves up, down, and sideways. So particularly when we talk about using call options, we're only going to be focusing on the one way that the stock market moves, which is up. So we're going to be talking about how to capitalize on that upward movement, but with leverage or with the ability to get exponential potential returns. All right. And so we talked last week about the 4 components of an option. So those 4 components are right here on the screen for you to review. Those 4 components are C1, you have the right to buy a specific asset. For us, that specific asset is a stock, okay? C2, the second component, you have the right to buy that asset at a specific price. C3, you have the right to buy that asset for a specific amount of time, all right? So you got an asset, which is the stock, a guaranteed or a specific price for a specific amount of time, and then you have the cost of that contract. What is the cost for entering into that agreement? And those are the 4 components. So as we transition and start to go deeper and talk about call options, we're still going to be using those 4 components, but we're going to be using those 4 components with respect to call options. Okay. So what is a call option? This is the definition, or at least my definition, my broad-based definition, okay? It is typically a bullish contract. Now, I say typically because you can use call options to go bullish or bearish, I should say, but that's more of an advanced strategy. So typically, it's a bullish contract that gives you the right, but not the obligation to buy a certain stock at a certain price for a certain period of time. Okay. So again, you got this contract, this piece of paper that's saying, hey, I have the right to buy this asset, a stock, at a certain price for a certain period of time. And it's bullish, mean we believe the market is going higher. Okay. So that leads me into when to use a call option. So if you believe the stock is going up and you want to control the stock, as opposed to owning the stock to capitalize on the upward movement. And as we get into the example, you're going to see why would you want to control the stock versus owning the stock? Well, what if it's a $3,000 stock like Amazon? You might just want to control it. You might not want to tie up $3,000 for one share. And we're going to show you how options may be a better alternative. Also, maybe you just want to capitalize on the movement. You don't actually want to own it. You don't want to collect dividends, but it moved $5. You would love to make $3, $4, $5 off of it, but you don't want to tie up that much money. And so these are the opportunities where a call option is going to come into play or be a possible viable option for you to invest and trade in some higher stocks. Okay. So there's 3 types of call options. There's not a fourth. I've never seen a fourth. Okay. So there is the in the money call option, at the money call option, and out of the money call option. So if you ever heard someone say that option's in the money, out of the money, at the money, we're going to break down what does that mean. Okay. So an in the money option just means that the agreed upon stock purchase price is lower than the current price. And we're going to walk you through. We're going to draw out an example, but just keep in mind, if the stock is trading at $100 and someone agrees that you can buy it at $90, well, if it's trading at 100 and they're saying you can buy it at 90, it's in the money by $10. And you'll see that when we draw it out, because I want to make sure you understand that's going to be a crucial point. Okay, if it's at the money, that means the option, the at the money option is the agreed upon stock purchase price is roughly the same price as the current stock. So if we use that same example, if a stock is at $100 and someone says you can buy it for $100, That is the at the money. Or if the stock's at $100.50 and they say you can buy it at 100, that's roughly the same thing, right? That 50 cents, it's not going to make much of a difference. So that's considered an at the money option, okay? And then you got out of the money option. So that means the stock may be trading at $100 and they say you can buy it from me at 110. Well, that's $10 out of the money. All right. So just to make sure you're grooving with me and that makes sense, we're going to walk through a drawn out example. All right. So we're going to draw it out. But for right now, just let me know if that makes sense by leaving a comment or leaving a thumbs up if that makes sense. My good buddy Douglas here got the thumbs up. Ken Carter's throwing the thumbs up. So make sure, let me know if that makes sense. And then I'm going to turn on my drawing board and we're going to draw it out because I just want to take it a step further so that you can visualize the concept here. All right. So here we're going to say, so we're talking about in, at, and out the money. All right. So let's draw it out. So let's just say, boom, boom. Okay. So down here is time. This is time, this whole graph. So we'll just say January, okay, to December. But over here is price, okay? All right, so this is price. So we're gonna walk through this with about, that should be enough. Boom, boom. Okay, so let's walk through this, ladies and gentlemen. So let's say you have a stock. Let's go current price. I want to use a different example. Let's say current price of the stock is $50. Okay. So you got a stock that's trading at $50. So let's just say this is 40, 30, right? 50, 60, and this is 70. All right. And we are in August. This is about August, somewhere around here. I might be a little bit off with my drawing skills, but the stock is currently trading at $50 right here. Current price. Okay. All right. So we know that the stock is trading at 50. So let's talk about an in the money option. In the money. All right. All right. So if we know, if we were to go back, let's go back for a second. If we were to go back and we say, we know that an in the money option is what? An in the money option is where the agreed upon stock purchase price is lower than the current price. So what would be an in the money option if we know that the stock is trading at $50? So anyone just throw something out. What would be an in the money stock price if we know that it's trading below the current price? All right. So we know the current price is $50. So what would be an in the money stock price? All right. This is where I want you to participate. Make sure you got it. All right. So my girl Felicia says 40. Juan says 40. Got it. At least you two are getting it. I know there's more people on than that. They're probably eating Doritos and they can't lick the cheese off their fingers and get it too quick. You got Donovan who says 45 or below. Okay, so the reality, Joseph says 49 or below. Eugene says 40 or below. So you guys are getting it. Anything below $50 would be an in the money option. Okay, so that's right. Anything, I'm going to try to color code this. So anything below 50 would be in the money. So all the way from 49 all the way down, right? My man William says he likes Doritos. Hey, me too. So anything 49, so in the money would be anything below 50. Okay, cool. Now let's jump back again. And at the money, it's going to be any stock price that is roughly the same price, or any option strike price that is roughly the same price as the stock. Okay. So if we go back over here, you're at the money. We'll make at the money purple. So we got in the money, Let's go at the money. So your at the money is going to be I'm going to do this. If you remember this in math class, that's like almost equal to or roughly equal to. So anything roughly equal to 50. So what that would mean is like $50.50, $50.25, $50.10. It could be, anything like that is going to be roughly the at the money. Now, most options don't trade in cents like that, but the closer that it is to 50 is going to be the at the money, right? So we're going to call this close to 50. All right. Now, here's the one that confuses some people, and it shouldn't confuse you because you are rocking with me today and you're going to learn this stuff. Let's go back. So what is an out of the money stock option? It's an option where the agreed upon stock purchase price is higher than the current stock price. All right. So what would be an out of the money price? Go ahead and type it in below. That girl Felicia is on it. Felicia said, oh no, that was from the last one, says 50-ish. All right. But her, to your point, I'm sure you guys are going to get it, but anything that is above 50, okay, is going to be out of the money. So anything above 50 is going to be an out of the money option. All right. And so you got Mitchell. A couple of you guys are getting it. Love it. Love it. Because that's what I want to see. I don't want you leaving here confused. I want you like, okay, I'm getting it. It's making sense. Mitchell said 55. Juan said higher than 50. Ron, 51 or more. Garnell, 75. Chrissy, over 50. Freddie, 51 or more. Douglas, Eugene, Coy. All right, you guys are getting it. Look at YouTube and Facebook showing up. All right, so now we understand what an in the money, out of the money, and an at the money option is, okay? What you may not know is when to buy which specific one, when to use each one. And that's why we, teach this more in depth. But what I'm going to do is walk you through an example, all right, we're going to stick to in the money options just for this illustration purpose. So I put the warning sign up there because we're about to do some math, ladies and gentlemen. All right. Now, most of you didn't like math in school, but I can assure you that when it comes to the stock market, math is your best friend because we're talking about making money. We're talking about having the ability to take some money and then turn it into 50, 100%, 200% return sometimes, possibly. You also could lose 50, 100, 200%. All right. But when you know what you're doing and the most optimal time to do it, this becomes powerful information. So we're going to look at some mathematical examples. You might want to grab a pen and paper and follow along, or again, make sure you subscribe and you can come back, watch the video, pause it, and kind of work through it on a scrap sheet of paper. All right. So let's go there now. So we're going to break down buying the stock versus buying the call option. Okay. And so in this example, you had a stock that in May was about $10. And in June, it went up to about $20. It fell a little bit in July, but now the stock is at $30. So I just made this stock up. We made up this example. This is ticker symbol XYZ. Okay, the alphabet company. All right. And so the stock is trading at $30. Now we're going to walk through why would you buy the stock and why would you buy the option? And what's the benefit of doing one over the other? So let's dive into that. So we're going to deal with 1,000 shares just as an example. Okay. Now, when you're dealing with options, you can buy options in as little as one contract, which controls 100 shares. So when we're dealing with 1,000 shares of stock, we're going to be dealing with 10 option contracts. And you'll see that when we switch over to the option side of this example. So right now, we're going to buy 1,000 shares of stock XYZ, and we're going to buy it at $30. So you can easily see that $30 times 1,000 shares is going to cost you a whopping $30,000 out of your bank account, okay? Now, most people, the average investor, right, that's working a full-time job, just putting away something in their 401k, wants to get into the game, typically they're not sitting around with $30,000. But let's just assume you are. So here you are, you get to own the stock. And let's just say the stock moves up $5 in the next 30 days, right? So you bought a stock at 30, it moved up $5. It's now up to 35. You made a whopping $5 per share. You own 1,000 shares. Woohoo! You made $1,000. Now, I mean $5,000. That is not bad. That's not bad money. 30,000, you made 5,000. But you needed $30,000 in order to make 5,000. And so what starts to happen at this point in the game is most people will get discouraged about investing, right? Because most people will start to say, well, there's no way I got a $30,000, right? And so how in the world am I going to make $5,000? Well, let's go look at the option to buy an option and see how that changes the game for you. Because this is what changed my life. I didn't have a lot of money when I first got started, but once I learned that I can get similar returns with options without having a lot of money, it literally changed my life. So let's look at the other side of the equation. And let's say you were to control the stock. You don't want to own it. You just want to control it. Okay. And so we get an at the money option for this one. I initially said we're going to do in the money. So it looks like we're going to do at the money option as the example. So I apologize. We're going to do at the money option, which means what? If the stock's trading at 30, we're getting a $30 option, right? That's at the money. All right. So we did an at the money option. And let's just say that option was going for $3. It's going to cost us $3. Remember, one option contract controls 100 shares. So in order for us to control 1,000 shares, which is the equivalent of what we bought on the other side buying stock, we have to buy 10 contracts. So that's why you see $3 per contract times 10 contracts times each contract controls 100 shares, okay? So that's how we come up with our pricing to control 1,000 shares. We need to buy 10 option contracts. So that's what we spend. Now we spend $3,000. So if we just pause right there, let's just pause right there. You're in a situation where you can buy 1,000 shares for $30,000, or you can control, okay? You can control those shares for $3,000. It doesn't take a rocket scientist to know, right, which one of these is more ideal for the average person. Does the average person have $30,000 or does the average person have $3,000? Okay. And this is where my life changed, because I'm like, there's no way I can. If that stock's $30, how do they expect me to buy Apple? How do they expect me to get involved with Amazon? How do they expect me to buy Tesla? I don't have that type of money, right? And so you can quickly see how you go from possibly saying this isn't for me to saying, but I can come up with $3,000 to get into the game. So let's go back here and take a look. So the stock moves up $5 in 30 days for both the person who bought the stock and the person who bought the option. So the stock is currently trading at $35. On the option side, though, you make about $2,000. Now, you may say, wait. On the left side, Jason Brown, when the stock moved up $5, I made $5,000. On the right side, the stock moved up $5, only made $2,000. Yes. But let's break it down even further. Why, right? Because it's not also about why, which one made more money. It's also about percentage, which you'll see here in a second. So let's keep going. So let's break it down. You bought 1,000 shares on the stock side, right? It cost you $30,000. You made $5,000 in profit. Okay, if you take $5,000 in profit and you divide it by $30,000, that's a 16% return. Now, that's not a bad day. That's not a bad life if you can make 16%. But let's go over to the option side. You're controlling 1,000 shares. That costs you $3,000 and you make $2,000 in profit. So what happens? You take the $2,000 profit, you divide it by the $3,000 it costs you to get into the trade, you get a 66% return. And this is where most people get lost. Because see, on the surface, you look over and you say, well, isn't making $5,000 better than making $2,000? Not necessarily. Not when you consider that you had to put up $30,000 to make it. But what about putting up $3,000 and making $2,000 and getting a 66% return? That makes a big difference, okay? That makes a big difference. Now, you may be thinking, well, why didn't the option move as much as the stock? Well, as you start to learn more about options, an at-the-money stock is not going to move dollar for dollar with the option, okay? Or at-the-money option is not going to move dollar for dollar with the stock, okay? So an at-the-money option, if the stock moves $5, the option might move $2, okay? So it's a percentage of the move, but that $2 that you make on the option side, percentage-wise, it outweighs the money that you would make on owning the stock side because of how much money you had to put up. So that's why it's about controlling the stock versus owning the stock. Let me know if that makes sense to you, all right? Because I want to take my time with this because options are so important that if you don't understand it, you could miss the benefit of it. And that benefit is really knowing that you could take a small amount of money, you can control a popular stock or a stock that's on the move that you want to be in, and then you can capitalize on it without having to have a $30,000 account, without having to have a $100,000 account, without having to have a $1 million account, all right? And so now all of a sudden, once you understand that you can get in the game for a smaller amount of money, you start to understand that the stock market is not necessarily just for rich people, okay? The stock market is for those who have the knowledge on how to use options, right? And then also can come up with $1,000, $2,000, or $3,000, which most people get during their tax returns, all right? Also, I put my phone number up there, our direct number that you can text me. I always love hearing from, those of you who are watching our videos, whether you're saying, dude, this was good information, or I'm confused, or that really helped. So feel free to text me and my team at that number below. But I really want you getting this, all right? So I really want you getting this information. So let's go back to the slides and then let's walk through how this still goes, right? All right. So let's keep going. Now, we had a couple questions pop up. I'm not sure if I understand it. Eugene says, why pay $3,000 for 2,000 profit? You're not paying $3,000. You invested 3,000 and you got back 5,000 total, of which 2,000 is profit. So I want to make sure, this is why I said warning, we're going to do math, because if you don't understand math, you're going to get lost. You put up 3,000, you brought back 5,000, of which is 2,000. So you didn't pay. You actually got your original 3,000 back plus $2,000 profit. Same thing on the other side. You put up 30,000, you got back 35,000. So you still had your initial 30,000 and you brought back 5,000 of profit. All right. So want to make sure that is clear. So hopefully that helped you out. All right. But that's why we got a whole 30 module course on this. And that's why we're doing a 5-week free series on this, because options have a lot of math involved. But don't worry. We got a couple more examples coming. So stick with us. All right. So let's keep moving. All right. So what I want to do at this point is I want to switch over and pull up my trading account. So there's supposed to be a picture of me pointing at the Power Trades University, because what happened was inside of Power Trades University, I walked our members through a real life stock example. And let me back up for a second. I think you guys are getting it because I know the comments are delayed. Freddie says you got back 5K, not 2K. Exactly. But of the 5,000 you got back, 2K was your profit. All right. So cool. A lot of you guys are getting it now. That's good. That's what I'm saying. You might have to watch it twice, but I also want to take my time and make sure I do answer these questions because I want to make sure you understand it. So let's do this. I'm going to show you inside of Power Trades University. Then I'm going to walk you through a real example. And then if there's enough time, I'll actually pull up an option chain so you can see how this stuff actually works. Wendell says the courses are super helpful. Absolutely. People say all the time, why would I pay for a course on this? Because it's confusing. It's confusing. And you need examples. You need PDF, cheat sheets. You need this stuff really broken down. But you won't even consider taking the course if you don't understand at least the most basic concepts of what this can do for you. And that's what I'm here. By the way, before I switch and show you that, I also want to let you guys know that we also have the stock option starter pack. All these are free resources for you. This video series, free for you. The stock option starter pack, you can go to stockoptionstarterpack.com, download that. That's a whole PDF where I break down stock options. I give you more examples. I walk you through how it works. I give you examples of other industries that use it. So also feel free to use that as a resource as well. All right. So let's go over here to this screen. All right. So this is the back end of the U, and I'm only showing you this because I want to show you a real life trade that we posted and that we were able to capitalize on. So let me go into the Bullish Community Forum. All right. This was the chart I posted. It's called 4 charts and 4 trades I like right here, right now. So I posted this for our members. I walked them through exactly why I like it and what's going on. But this one this is the one I want to focus on. Even though I capitalized on a few of them, most of you use Facebook or are familiar with Facebook. So I broke down this analysis on Facebook. I posted the chart. I talked about why I like it. All right. And so this was the chart of Facebook before it blew up. All right. So let me switch back to the screen here. Okay. All right. And so hopefully that shows up good for you on the screen. So I want to walk you through this because this is powerful, guys. And I want to make sure you're getting this. All right. So we posted that trade on Facebook inside the forum. Matter of fact, let me go back because I don't mean to jump screens here, but let me just go back and show you something. This shows you the date I posted this. I posted this August 20th for our members. Okay. Posted this August 20th. You can see that for the members. Okay. Reason I'm showing you that, because if you go back here, if you look, I bought the trade August 21st. Can you guys see that? Do I need to zoom in? Let me see. Can I? I don't think I can zoom it, but you should be able to see it there. August 21st, which is the next day, I bought the trade, right? So it's not like I bought it, then I posted it. I posted it and then I bought it the next day. So you can see I bought 10 contracts of Facebook and I paid, it looks like I paid about $10 for, I paid $10 for 10 contracts of Facebook, okay? And you can see 3 days later, I sold it for $27.45. If you look at the transaction profit, I put up $10,000 and I made $17,000 in profit in 3 days. In 3 days, okay? And so this is why I laugh when people say, stocks, these people don't make any money, or like all they want to do is sell their courses and stuff like that. It's like, no. When you're on the outside looking in, I could see how it could seem like that. But when you're on the inside, we're sharing this information with people. And I always say, what would it be worth to get alerted or get the analysis or know that a stock is getting ready to move? And then I jumped in with 10,000, pulled out 27,000, of which 17,000 was profit. Now, here's what I want to do. Let's go back here and then let's break it down though, because you got to get this. You got to get this, all right? So let's do that side-by-side comparison again, okay? So we're looking at Facebook stock, all right? Facebook stock. We got buying the stock side. And then we got buying the option over here. Okay. So I'm going to make the option side blue. So what I did was I bought 10 contracts, which controlled how many shares? 1,000 shares. So 10 contracts times 100. And it cost me $10 for that. So it cost me $10,000. Okay. Now, Facebook at the time, let me see, what is Facebook trading for? And let's go back a couple of days. Let me see here. I'm just pulling it up on my phone and pulling up what Facebook is going for. So Facebook's going for $294, but 5 days ago when we did it, I think Facebook was going for about $280. Okay, so let's just say Facebook was going for $280. So if I were to buy 1,000 shares of stock, 1,000 shares, I would have had to put up 280, which means I would have had to come up with $280,000 to do the same thing, right? So if I would have bought this Facebook stock, I would have had to put up $280,000. But because I did the option, I bought 10 contracts, which controls 100 shares per contract. So that's 1,000 shares for $10, cost me $10,000. All right. Now, my profit, as I just showed you, my profit was $17,000. Okay. Which means I put up 10, brought back 27,000. But of that 27,000, 10,000 was profit. If I take my profit and divide it by the 10,000 that I put up, okay, I end up with, what's that? 170% return, right? This is where I break out the calculator. So hold on. Let's do it. Let's do the calculator here. All right. So $17,000 profit divided by $10,000, right? Times 100. I knew the answer, but I just like using the calculator. 170%. Now, if I would have did it with the stock and made $17,000 divided by 280, 1, 2, 3, 6, that would have been a 6%. That would have been a 6% return had I did the same trade by buying the actual stock. And I would have had to come up with $280,000. But instead, I put up $10,000 and in 3 days, I pulled back $17,000 in profit, right? I mean, man, that's enough to bring in a DJ horn. That is fire. You know what I'm saying? That is fire, ladies and gentlemen. And so that is what this whole series is actually about. So I'm going to pull up an option chain too, but if you have questions, this is a good time to ask your questions as well. All right. Trading Bot says, how long out did you open that profitable trade? I showed you. I bought it on the 21st and I closed it on the 24th. All right. So let me bring it back up. You can see here, I bought it on the 21st and I closed it on the 24th. So one day after I posted it for our members, I bought it because I posted it on the 20th, bought it on the 21st for myself, sold it 3 days later. So you can see all of that. Douglas says, great profit. Coda says, who wouldn't learn options? Well, some people are skeptical because they don't know how it works. So they're like, oh, it's risky. Now, there is some risk. Now, we still got more to the presentation. I do want to talk about, some of the risks, all right? But get your questions ready as well so that we can go through those. So let me show you, not that one. Let's go back here. All right. So let's continue. I believe I got a slide on the risk that's associated with options. And nope, I don't. All right. Well, I'm just going to talk you through the risk that's associated with options. I thought I created a slide for it. All right. So what's the risk? Some of the risks associated with options is, what if the stock didn't move in the time frame I thought? Well, the option can expire worthless, whereas your stock, you can hold on to it forever and wait for it to move. So that could be one of the downfalls of trading options. Okay. So it's like, well, what if the stock doesn't move? Well, your option, each day it doesn't move, your option loses what's called time value. Okay. So it can lose value each day it doesn't move. But again, you have to know when to buy the option, which option to buy, how much time to buy. So I don't want you leaving here thinking you're an expert on options. There's still when to buy that one. Do I go in the money, out the money, or at the money? How much time do I give it? So there's still more to this, all right? And I don't want you just thinking, that's it, I just buy an option and I'll wait and I get lucky. No, you want to look at the stock chart, determine where you think the stock is going and in what time frame. Then we want to look at the options and start to apply that criteria to the options and then try to get in and get out. That is the name of the game. All right. So let me see here. Wide DeSale says, when I do buy a call option, it says the bull call option order you enter requires a higher level option agreement. Why is that? Because most people don't understand options. You have to get approved for options. So there's levels to options. There's level 1, level 2, level 3. I actually did a podcast about it. Maybe my team can post a link below or in the comments. I did a podcast about the option levels and what it takes to get approved for them. Level 1 is like, I can just do covered calls, means you own stock and you can sell options against it, or you can buy call options. I think level 2, you can sell options. Level 3, you can do spreads. Level 4, you can go naked, which means you can sell some options even if you don't have the stock to cover it. There's different levels to it, but you probably weren't approved to do an uncovered call or just buy a straight call option or a straight put option. It's a good chance that's why. Omar says, I also see take profit in a non-taxable IRA account. So funny thing is, I don't know if I explained, I actually did that trade inside of my IRA account. So I have a trading account, I have a retirement account, I have a day trade account, I have separate accounts to do different stuff with. That trade was actually inside my retirement account. So I just boosted my retirement by $17,000 and it all grew tax-free, or at least as long as I don't pull out before age 59 and a half. So I guess that's tax deferred. But I actually did that trade inside my retirement account. Trading bot, I think I already answered that question. How many days did I hold it? FOXMJ said, did you share that with people from the members? So again, if you are in the university, right, it's right here for the members to see, right? And so the members commented on there, thank you for providing this insight. Which position should we take? Thanks, coach. Big Rob says, I'm in 2 contracts on Twilio. So yeah, we walked through that. Douglas says, as of today, I'm up 21%, took 61% off the table. So yeah, so we got a whole, trust me, there's a whole other discussion going on inside the community. So yes, our members know what's going on. Grishar says, you're investing in education in the market. Exactly. All right. So Catherine says, I've been doing vertical spreads to hedge, but I haven't been successful. I don't lose much, but I lose. So Catherine, we're going to be talking about spreads on next week. Next week, we're going to do put options. And then we're going to also talk about spreads the following week. So make sure you tune in for that one. I do have an entire course on spreads, but I'm please join the free session that we're going to be doing here in 2 weeks on spreads. But I have an entire course on spreads, debits, credits, all the strategies, when to use them. We got all the templates and the breakdowns of when to use them based on the templates and stuff like that. So we do, if you're losing money on spreads, it's a good chance that you're probably not selling the right spread, right? You're probably buying the right one, but you're not selling the right one, or you're selling too much time. It could be a couple different things why you're losing money, but make sure you join us in 2 weeks when we talk about spread. Next, we're going to talk about put options next week, and then we'll talk about spread. So thank you for sharing your experience with spreads. If I can help you, I'd love to help you. And maybe you can bring your questions to that session, and maybe I can give you a coaching session live on the air. Lagoose says, how often do you post alerts on Facebook? It's not necessarily about Facebook. I post alerts, or I send text alerts to our members anytime that there is a trade that I believe is worth them taking a closer look at. All right. E3 Financial says, I appreciate the training. Thank you for doing this. I'm going to start something for young boys of colors. Cool. The more people we got teaching, as long as you know what you're doing, could definitely help open some people's eyes, no matter what race or ethnicity, but for sure people of color, we definitely need this information. Okay. Eugene says, when do you have to own 100% of a stock to write sell a call option? So that's called a covered call. All right. That means you own the stock and you show someone the right to buy it from you. You have to be covered. So if the stock continues to go higher and they come and say, I want my stock now, you can't say, I don't have it. So you need to own the stock and then sell an option against it. That's called a covered call, Eugene. So that is when you would have to own the stock to sell it. Sell an option against it. If you sell an option against a stock you don't own, that's called being naked. All right. And the reason it's considered being naked is because the stock can continue going high and you don't know when it's going to stop. And so you have to go buy it at that price and give it to somebody at a lower price. So you're naked, or they call that uncovered. That's the potential for unlimited loss, which your broker won't typically approve you to do uncovered unless you have, it changes from broker. Some say you got to have $100,000 account, net worth of $1 million. It just depends on your broker, but typically you have to have a $100,000 account to go naked. Same way you have to have a $25,000 account to day trade. If you do more than 3 day trades in a row, you get flagged as a pattern day trader, and you have to have at least $25,000 in your account to be able to do that. All right. Trading bots. Do you have like a daily trading community? Everything is inside Power Trades University. So we all talk in here daily. So this is our forum. You can see, if I go home or forums, you can see a lot of conversation going in here. You can see someone posted an hour ago. We're talking about Tesla. This is where all the magic happens. So yes, it's happening inside the community. All right. I don't know who this is, but we might have to block this person. Unless that's a real question. Let me see. Calvin says, what did you see on the chart for Facebook that made you get in when you did that? Let's pull up the chart. Well, here, I'll take you inside the U and I'll read it to you. I'll read you because I wrote the description for our members, right? So I'll just show you. Calvin said, what did I see inside the chart? All right. So this was the thread. This chart is a buy. If you go down to, there was a few other charts that we were, oh no, not this one. Sorry. Give me 1 second, guys. 4 charts, 4 trades I like. On Facebook, I wrote out what I saw right here. So I'll read it and that'll probably take us close to the close. Looks like the classic flag pattern pullback and bounce off the moving average. So if you don't know what that is, this is a flag pattern pullback to the 10-day moving average, and then this day is the bounce. Looks like a classic flag pattern pullback and bounce off the moving average. Pros, cloud-based company. People need to advertise with the presidential election on the rise. There will be dollars coming into Facebook, and people will most likely watch the debates on live stream or at least be on Facebook to share their opinions. which means they will get shown more ads, which means more advertising dollars for Facebook. The only thing I don't like as much about Facebook at the moment, some news can come out on the stock given enough and rock the stock, but given enough time, you can see from the chart, it has overcome any negative news or user scandals. So basically you can see Facebook has this move up and then it has these flag pattern pullbacks, right? Has this move up and then this flag pattern pullback. And so when we saw this move up and saw this flag pattern pullback, I thought it was worth our members taking a look at. And obviously it was worth me putting real money down. And it turned out to be a $17,000 profit for me. So also a part of knowing which option to buy is also knowing how to read the stock charts, which is a big part of what we do. We go over stock charts for 2 hours every week with the members. But learning how to read the chart, spot patterns, and then also have a fundamental thesis of why you believe it can go higher is also important, right? And so those are all the things that went into that trade. We read the chart. We also had a fundamental reason why we believed it can go higher. We looked at the option. We liked the option, okay? And so we put money to work. We took a calculated risk. And that's really where you want to be. You want to be in a position where you take calculated risks. You don't necessarily want to, I just think I'm going to buy an option today. It's like, did you look at the chart? Do you have a fundamental reason why you think it can go higher? Okay, so those are all things that are important. JD Glex says, these crazy profits, how do you not get caught up and start gambling on options? Discipline. It takes discipline, right? So the gambler's just saying, I'm going to buy something, right? The discipline says, I'm going to look at the chart. I'm going to be patient. I'm going to wait for a pattern or a setup that I'm familiar with that works majority of the time. And then when you see that pattern and you see the option and you like the risk reward ratio, you pull the trigger and you take a calculated risk. Nothing is for certain, but we take calculated risks. We don't necessarily gamble, right? So we looked at the chart. We had a thesis, a pattern. We looked at the option. We had a risk reward ratio. We took the calculation.